All right, so we're looking at our third category here, which is the ending balance in our WIP. And these items have been started, but they have not yet been finished. So to start off with, let's look at our direct materials equivalent units. Well, because the process has already been started and all materials are added at the very beginning of the process, as you remember, all of the gallons that are in process have had their full direct materials. So the equivalent units are 3,000 equivalent units, and it is at $1.10 a piece, which is 3,000 at $1.10. It's $3,300 in equivalent units. Okay, let's give ourselves a dollar sign here. I like to be consistent. Oh, nope, it didn't like that. Let's do it this way. Okay, so as far as what the balance is in our ending WIP, we've got $3,300 of direct materials costs being applied. Now let's look at our conversion cost, and this is where it's interesting. Our conversion cost, I'm just going to do CC for that, is equal to 750 equivalent units at 30 cents a piece. Right? Because the idea is that they don't have all of their conversion costs applied to them, the direct labor and factory overhead, because they're not done yet. They still need to be worked on. They're only 25% complete at this point. So you're only looking at 750 equivalent units rather than the 3,000 that are here in total. So that's 750 at 30 cents a piece is $225. So, hang on. Yes. The total then is the sum of these two. It's $35.25. So what do we have here? What we have is we have the value of the gallons of ice cream that have transferred over to the next process, which is work in process packaging. Right? So the $66.75 and the $79,800, both of these are finished, right? They're done being mixed, and they've moved over to the next process, which is packaging. Whereas these guys are still being mixed. So if you were to ask what would be the WIP balance in my mixing at the end of the month, the value would be $3,525. So you would start on, since this is July 31st, now that it's August 1st, let's say we're looking at the next month here, this would be your beginning balance costs in those that are still being worked, that are currently being worked on. So this is basically the equivalent for right here, the $62.25. Because that $62.25 was the value that carried over from the month of June. All right. Now that you've seen the process for these things, you might want to take a screenshot of this or print it out, or hopefully you were following along maybe on paper. What I'd like to do now is I'd like to look at the journal entries for these items. So if we went way back to that first slide earlier, you would see that the entire amount of materials that we bought for the month was $88,000, and you have a credit to accounts payable of $88,000. Nothing really earth-shattering there. Our second entry was to take the direct materials from the mixing department and put them into the mixing department. So this is your milk, your cream, your sugar, and all of those things. It was $66,000 worth of materials. $8,000 of materials were also asked to go into the packaging department. All right, they were requisitioned by packaging, and they give you the indirect materials cost as well for mixing and packaging. So what we're looking at here is we put into work in process the direct materials for the mixing, and we put into work in process packaging the 8,000, and you've got a factory overhead mixing and a factory overhead packaging. Now, again, we know the way that we're going to apply this factory overhead is going to be on some sort of cost driver, but initially you're putting it directly into factory overhead and leave those indirect materials costs. Alright, so now you're given information about direct labor. Direct labor in the mixing and packaging department was $10,500 and $12,000. Okay, again, direct labor goes directly into the work in process that you're working on, whether it be mixing or packaging. So, and your credit being to wages payable. Now remember, if you were looking at financial accounting now and you were reaching back to those memories, your debit would have been to something like wages expense. Well, instead of things going to the income statement just as an expense, now you're building them into being the cost of this inventory. Okay, depreciation. Well, depreciation is an indirect cost. it's not direct material, if it's not direct labor, but it's absolutely necessary to making the product, then it's going to be considered an overhead cost. So with that, instead of a debit to depreciation expense, which is what you would normally have, your debit is to the factory overhead accounts, factory overhead mixing, factory overhead packaging, and your credit is to the accumulated depreciation. All right, the next one we're looking at, factory overhead applied to mixing and packaging, was $72.75 and $3,500. Now they don't tell you how they're applying it, so we're just taking it for granted that they're giving you the amounts that you're going to apply. So they don't say, based on direct labor dollars, we, or direct labor hours, we apply $5 for every direct labor hour. Okay, we worked on that a lot in the last chapter, but we're really not focused on that here. More you're given the information, you're really concerned about how it flows through the process. Okay, so what you're doing is you're taking out of factory overhead and you're putting it into the respective WIP accounts, right? The WIP for mixing, WIP for packaging. Okay, so now let's say that we finished. So now that you've got to transfer the costs for the items that you finished out of WIP mixing and put them into WIP packaging. Remember, these are asset accounts. These are inventory accounts, the work in process. So you're crediting the asset account of work in process mixing and you're debiting work in process packaging for $86,475. As I mentioned earlier, we're working all on the same problem here, so that $86,475 is right here. The ones that we finished, the $66.75, plus the ones that were started and completed of $79,800. If you add those together, you should get to the $86,475 that's going on here. So what you're doing is you're transferring the costs out of mixing, putting them into packaging, which is the next process. Okay, and once you have finished them, right? Once you finish the packaging part of it, and this is just information that's being given to you. I don't know that you had this information in the set earlier, but they're just telling you, they're showing you the journal entry for taking it out of packaging, right? Where you put materials and labor into packaging and factory overhead into packaging. We did all of that already. What we're doing now is once we're done with the product, we've mixed it, we've packaged it, we're now putting it into finished goods, our other category of inventory. Because remember, we've got three categories of inventory: raw materials, work in process, and in this case you have more than one process, and finished goods inventory. So you're taking it out of work in process packaging when you're finished with it, and you're putting it into that finished goods category of inventory. And then when you sell it, there you go, our credit to finished goods, here we go, and a debit to cost of goods sold. All right, we're leaving one part of the entry out, which is the debit to receivables or sales, and the credit to sales revenue. That's the only part of this entry that is being left out, but it is showing that the inventory part of the entry where you're debiting cost of goods sold, crediting your finished goods. And what we have here is basically a summary of what would be on your balance sheet at this point. These are the materials that you never touched. Okay, those are the ones still sitting in raw materials. If you want to track back to that, you can. The work in process that's in the mixing department, $35.25. We actually calculated that right here, $35.25. That's what's still sitting in WIP, and has not been completed yet. The work in process packaging department, you could back into that number as well. What's in finished goods, you can back into that number as well. The point is you have these three categories to comprise your total amount of your inventory cost. Okay, so that's about it for the number crunching in this chapter, if you will, in the journal entries. From here, I would suggest reading the just-in-time information and how you would look at these items in a report as well, I believe, is part of the remainder of this chapter. But if you have any questions, you know where I am. Have a great day.